All right, traders, let me share something very easy with you right here in this video about top-down analysis. Top-down analysis is important because whatever strategy you're trading, if you don't know how to do top-down analysis, you may have some difficulty getting the right direction of the market. And basically, whenever you're trading in the market, your goal should be you trading in the direction of the market. Now, what exactly is top-down analysis? Now, top-down analysis is simply your own ability to look at the market from a higher time frame perspective, bringing it into a lower time frame perspective, and be able to take trade in the direction that it will not be affected when the smart money, who are the big players in the market, are back in the market. All right, so let me do this. I've not done analysis on gold before, but I just want to do some short analysis right here and show you. So what are the major things to look out for when you're doing top-down analysis? The first thing to look out for is the market structure. All right, market structure is extremely important. And then secondly, point of interest. And then you will talk about shift in market structure, or what other people call a change of character. These are important things you need to pay attention to. And another thing also I forgot to put is the time frame of interest. Let me just quickly put it for you so you will see it as part of the things you should pay attention to. Time frame. All right, now if you are trading intraday, for those of you who are not trading higher time frame, such as the weekly or the monthly, if you are not a swing trader, the highest time frame you have any business with when it comes to your top-down analysis is the daily time frame. All right, the daily time frame is your friend as an intraday trader. The daily time frame is your close friend. You don't need the weekly, you don't need the monthly, just forget about it. And then how much data do you look out for? Now, I don't want to give you a specific number of data, but just look at the most recent price action, something like this. This is how I do it. I don't want to look at what is happening in the last 3 months or in the last 6 months. Just some simple data. If I just randomly select this area, I just want to look at what is happening in that exact area. All right. So the next thing to do now is to look at what is happening in structure. Remember, we said time frame and we talk about structure. So let's look at what is happening. Structure now. Look at this. If you are to look at it from this point, the last time you had a break of structure was here to the upside. All right. That was the last time you had a break of structure to the upside. And nobody needs to tell you that this is an uptrend. Nobody needs to tell you that this market is bullish. All right. And then the next thing you saw was that price created a high here, right at that level, and never created any high. But then price actually created a low here. This is a low that you need to watch out for. If you are looking at this from this perspective, you have a higher low right here, a higher low right here, a higher high here, a higher high. And what do you have here? Failure swing. Instead of creating a higher high, what do you have? You have a lower high, lower high. Now, this is where structure is important. This is where structure is extremely important in this regard. Let me show you what I'm saying. If you look at what is happening here, so if you are to look at this, the last time we created a higher low, this is a higher low, and this is a lower high, this is a higher high. Price created, what do you have here? Another lower high. And price never create anything called a higher high. It is a lower high. And do you consider this as a retracement? Yes. 1, 2, 3 candles up. If we have price coming down lower, we can consider this market to be a shift in market structure. This is what I want you to see. I just simply want to explain this to you. This is a shift in market structure to the downside. So if you're trading this currency pair, what do you think is your bias now? Your bias is bearish, you're no longer bullish, you need to be swift as possible. You need to be very, very sharp in understanding where price is retracing. And then immediately after you saw this, now would you consider this place as a fair value gap that price will hit and start going up? Yes, I will consider it, but I will not consider it as a fair value gap that price will use to go up again, because I am now bearish. The highest thing that will happen here is for price to hit this area and locate another point of interest before coming down. That is basically how the algorithm behaves whenever it is moving in a particular direction. Mind you that shifting market structure is extremely important, and so you need to identify it as fast as possible. All right, so look at this. Price had a shifting market structure hitting this particular fair value gap that we have here. This fair value gap is actually right from here, and price is hitting it here. Now what we need is for price to give us a confirmation that it is going to come back into this fair value gap, or even to this particular bearish order block, and then we will continue the bearish momentum. All right, but then this is when you need to use your understanding of structure, time frame, price, and everything that you know. Look at this. Did you realize that this is daily time frame? This is daily time frame, and then those of you that are trading in the lower time frame can take advantage of this. We don't know when is price going to start reversing up, but then at any point that price starts reversing to the upside, we would definitely see an opportunity to go bullish, because imagine you spending 3 days waiting for price to go up. This is simply what top-down analysis is. What is happening in the higher time frame will take time. I want to trade in the lower time frame. Now if we drop down to the 1 hour time frame, or we can even leave it in the 15-minute time frame to see what is happening. Let me just show you. I just hope you will understand what I'm doing. If you can solve this problem, you will do a lot in the market. You will not have trouble with identifying what is happening. You know exactly what the higher time frame is doing, and you know what the lower time frame is doing. So if we go down to the 15-minute time frame, 15-minute time frame is important now. Look at what price has been doing. Remember that we are already in the daily time frame fair value gap. Fair value gap. So it is possible that price is going to come back to this FVG in the daily, or this order block. But do you know that in the daily time frame it will take a week? It will take 2 weeks. So what I need now is to look out for that shifting market structure in the lower time frame that will start showing me that price is ready to go up. Go up to where? This point of interest. These two are POI. All right, I hope somebody is not getting confused in this. All right, just to keep you active on the community is why I'm just making this video at this point. So let's see that shift in market structure that will come in. Mind you, I'm not using the shift in market structure before the shift in market structure from daily, because somebody will be asking, so what? Look at this. I have a shift in market structure somewhere around here. This can be considered to be a shift in market structure, or you can even shift it up to this area. Mind you, we're not talking about this. We are talking about the shift in market structure that happened after the daily time frame shift in market structure. Let me show you. After the daily time frame shift in market structure, can you see? So anything that will come from here, the fair value gap here, right here, if we have a shift in market structure from our 15-minute time frame, we will counter trade. We are doing top-down analysis with a bit of counter trading, but the counter trading is not without knowledge. It is not without knowledge. We are doing everything with knowledge. So now this is the 15-minute time frame. I'm showing you something crazy here, guys. So this is the 15-minute time frame. Do you know that from here, let's see, where did we have a shift in market structure? Is it here? All right, this is where we have a shift in market structure. From the lower time frame, this is how to be able to catch big moves. Big moves. So this is where we have the shift in market structure from the lower time frame. Market structure shift. And imagine you taking trade in this kind of area. All right, this kind of area. You have this particular fair value gap. Do we consider this as a mitigation block somewhere around here? All this point of interest. Do you know that you can catch these big moves? Why are you catching this big move? You are simply catching this big move because you know that there is a point of interest that the daily is trying to catch up with. And I hope you know all this area is filled with liquidity. Filled with liquidity. Sometimes you need to pick confidence to be able to trade effectively. And the most nearest point of interest for this 15-minute movement is this liquidity void. This one. If price is filling this area, reaching up to this level, you can take your profit in crunches. You are simply doing a top-down analysis with understanding, taking trade in the opposite direction with a very, very clear understanding of what is happening. All right. So if you are to take trade in somewhere like this, I will prefer my stop loss just below this liquidity area. And then that doesn't mean that price will not disappoint you. This is where the confidence and trust in your analysis is also important. You need to trust what you're doing for trade to do according to your plans. That is the first thing to do. So we are watching this. Now look at this. Notice how price looked at this area. Notice how price used this area. These things I'm showing you, I'm not just saying it from words of mouth. I would do this if it were me, and I've done this time and again and again and again. I've taken this kind of trades and they worked for me. So my target is now going to be first here, somewhere around here. This is my first target. If I'm able to take out these areas, I can consider this higher time frame point of interest right there. All right. So if I'm watching this price action behave like this, this is the same thing I would do. So let me play it out and see how far, and then we'll continue to where I am about to strike the most important thing about this lesson for you. So I hope you're watching everything happening. I hope you're watching everything happening. All this, can you see all this movement? I've been in this kind of trades that price would just go up, come down, go up, come down. But then it is actually trying to create a better ground for movement. And then it has moved in that direction. Some of you that know me, you know I don't close my trade until I hit my target. And that's what I do. I set and I leave my chart until I hit my target. So this is how price is going to go. But then immediately after reaching your target, now this is the time for decision. And all this while, price has just been given opportunity to take trades. If you missed this first one, price gave you a shift in market structure here. Let me delete these guys. If you missed that first one, if you missed this first entry, which was here, price gave you another movement here. Price coming back to this area. Look at this breaker block. We have a breaker block here. Look at this breaker block. Boom. Price gave you this opportunity to enter the trade again, moving up. Now our target is immediately price enters this point of interest in the daily time frame. In the daily time frame, we are going to look for a shift in market structure to the downside. Are we seeing what is happening? Notice how price quickly react from this area. Look at how price quickly left that area immediately after reacting from there. Now, this is when we need to pay attention to a shift in market structure. And then, all right, so look at this. Look at this. Look at what is happening here again. Price pushed up, come down, what do you have? Price pushing up, creating this low. If I am to take out this low, then I will have a shift in market structure here. Shift in market structure. Now I will consider going bearish again. Why? Because everything has now aligned with my daily time frame bias. Top down analysis. With my daily time frame bias, what am I seeing? I'm already inside the fair value gap. I've touched the fair value gap. At least 50% of the fair value gap is enough for you to see that this fair value gap has been an active fair value gap. So the shift in market structure will come in. Now you can do this in the 1 hour time frame, or you can even do it in the 15-minute time frame. Look at this. If I were to look at this shift in market structure, I think I'm taking so much time explaining this. If I'm to look at this shift in market structure, then my entry is definitely going to be when price comes back to this area. All right, which area are we talking about? This area, around this area. Can you see a fair value gap there? And then this area can create an inducement, so you need to be very careful. This place, liquidity is there. You have to be very, very sensitive. Liquidity is residing there. All right, so this is the only challenge with knowledge. Because of my experience in the market, I know that you see this shift in market structure and you see this area, you're going to be an inducement. If you're not careful, I don't know if I play it out whether it will give me that inducement, but if you're not careful, you're going to be an inducement. This is because of my experience in the market. Now, the safest place to keep your stop loss is here. So now two things are going to happen. Putting your stop loss there is too expensive for me. This is too risky. Like, it's too big. It's too big for me to put my stop loss there. All right. So what I would do, instead of me to use this, the way this shift in market structure happened, it left liquidity around here, and there is a bearish order block here, unmitigated. Nothing happens to it. Did you realize that price never printed any candle in this bearish order block? So it's possible. Frankly speaking, price may go there. So this is when you need to deploy your knowledge of, all right, I want to see price come to mitigate this order block before I take the trade. All right, let me just play it out and see. Okay, so price just hit this fair value gap and start going lower. All right, I think something else is okay. You now see, this is what I was saying. This is exactly what I was saying. This area is going to be an inducement. So much experience. That is because of experience in the market. You are going to be used as a liquidity for the smart money. All right, so one has to be very, very careful. You see all this area is liquidity. You now see how price came and touched this order block. Now it is safe for you to enter the sell. This is the kind of place you can enter the sell and you will not get stopped out. Definitely. Honestly, when you do this, you will avoid a lot of trouble in the market. All right. So if I see a shift in market structure now, I will say it is comfortable. Yes, this is it. So in this kind of situation, I can enter the trade. Look at this. Look at this. Notice how price came back to test this particular bearish order block. Imagine I use this guy. If I don't have this experience, I'm going to put my stop loss here. All right, and then I get stopped out. But notice how price never came above here after touching this particular bearish order block. So this is it. I have a shifting structure here. Now if price is to come back to this area, I can take the sell. I can take the sell without any challenge. Notice how price swept all the liquidity here and did the same thing here. So this is the simplicity of top-down analysis, and I wish price, okay, let's see. Yes, you can see how price is now behaving, acting like the way it should act. Yes, so notice how price came back to this area. This particular fair value gap is now giving you some test of price coming back to that area, and you're shifting market structure. Oh, I'm just seeing something here again. Market structure shift. Can you see a breaker block here? So this is the right place for entry. The sell is here. This place. Somehow a unicorn entry. But if you take this kind of trade, I think you'll be very much okay. You'll be very much okay. All right, so guys, it's all about you calculating everything happening. So this is all the data that I just saw happening, and I say, okay, let me just share with you guys how possibly to take this kind of trades and watch out for everything that is happening. I hope this is educational enough for some of you to watch this, and you would avoid this kind of areas, and you would know how to look at the market. If the market is up, what is the time I should calculate to be able to be in the safer side, and how to avoid taking the wrong trades. All right, guys, I hope this video is helpful. Let me see if you have any question in the comments. I'll help you and I'll respond to you. See you in the next video.